Welcome to today's What Moved the Market show. I'm your host Prem. It's Friday, November 28, 2025, and here is everything you need to know as the markets close for today. Indian benchmarks Nifty 50 and Sensex closed nearly flat after a choppy session, with Nifty settling at 26,203, down 13 points or 0.05%, while Sensex closed at 85,707, losing just 14 points or 0.02%. Earlier in the session, both indices touched fresh lifetime highs, with Nifty hitting 26,310 and Sensex reaching 86,056 before profit booking in the second half erased most gains. BankNifty gained 209 points to close at 59,737, up 0.35%, also touching a new record high of 59,867 intraday. The overall market sentiment remained cautiously optimistic as investors digested India's blockbuster Q2 GDP data that came in at a robust 8.2%, significantly beating estimates of 7.3% and marking a six-quarter high, driven by strong manufacturing growth of 9.1% and services expansion of 9.2%. The rupee closed at 89.47 per US dollar, weakening 0.12% from the previous session and hovering near its all-time low of 89.73 hit in November, pressured by persistent dollar strength and continued foreign outflows, though the currency impact on markets was muted today as investors focused more on domestic growth momentum. Among the top gainers, Adani Enterprises surged 2.78% to lead Nifty after announcing acquisition of 72.8% stake in Flight Simulation Technique Center for 820 crore rupees, marking the conglomerate's entry into pilot training space, followed by Mahindra & Mahindra, which rose 1.92% on strong auto sector sentiment. Sun Pharma, up 0.85%, Kotak Mahindra Bank gaining 1.01%, and Adani Ports climbing 1.31%. On the losing side, SBI Life Insurance fell 1.72%, leading the decliners. HDFC Life Insurance dropped 1.36%. Shriram Finance declined 1.35%. Power Grid Corporation slipped 1.35%, and Bharati Airtel shed 0.74% amid sector-specific weakness. In mid-cap space, Motilal Oswal Financial Services surged 3.34%, SRF advanced 3.27%, and Kalyan Jewellers gained 2.39%, while small-cap segments saw Poonawalla FinCorp jumping 3.72% and Newland Laboratories up 3.6%. Sudeep Pharma made a strong market debut today, listing at 730 rupees on NSE, a premium of 23% over its IPO price of 593 rupees, and closing the day with gains of around 30%, as the pharma company's IPO was subscribed 93.71 times, reflecting robust investor appetite for quality healthcare plays. Technically, Nifty tested resistance at 26,300 during the session, but failed to sustain above that crucial level, with immediate support now placed at 26,150, followed by stronger base near 26,000, while a decisive breakout above 26,310 could trigger fresh upside toward 26,500 to 26,800 in coming sessions. BankNifty showed resilience with support holding firm in the 59,500 to 59,450 zone, while resistance around 59,900 to 60,000 remains the psychological barrier that once breached could open doors for a move towards 60,500. Sectoral performance was mixed, with metal, auto, pharma and media indices closing in positive territory, benefiting from the strong GDP print and hopes of sustained domestic demand, while oil and gas sector declined 0.5% on softening crude prices and concerns over downstream margins. Realty shed 0.5% on profit booking after recent gains, and consumer durables dropped 0.5% as luxury consumption showed signs of moderation. The stellar Q2 GDP growth of 8.2% released this afternoon provided significant boost to market sentiment, with manufacturing sector leading the charge at 9.1% growth and construction at 7.2%, while the tertiary sector maintained strong momentum, with financial real estate and professional services recording 10.2% growth and agriculture showing modest 3.5% expansion. Capital market stocks witnessed some volatility during the session, following news that SEBI may soon float a consultation paper on transitioning from weekly to monthly derivatives expiries, though the regulator has clarified that any changes will be implemented in phased manner after stakeholder consultations, with Chairman Tuhin Kantapande emphasizing that there's no plan for abrupt halt to weekly expiries. Additionally, SEBI released a circular today amending mutual fund regulations to curb incentive misuse and boost retail participation, introducing capped additional commissions up to 2,000 rupees for distributors, bringing new individual investors from beyond top 30 cities, and new women investors, with provisions effective from February 1, 2026, and funded through investor education funds. In commodity markets, gold on MCX surged by 619 rupees or 0.5% to close at 1,26,123 rupees per 10 grams, approaching two-week highs supported by Fed rate cut optimism and softer dollar, while silver witnessed strong rally jumping by 2,030 rupees or 1.25% to reach 1,64,497 rupees per kilogram, hitting fresh highs on sustained physical demand and positive global cues. Crude oil on MCX traded marginally higher by 7 rupees or 0.13% at 5,297 rupees per barrel, while globally, Brent crude remained under pressure around $63 amid concerns over Russia-Ukraine peace talk developments and upcoming OPEC Plus meeting on Sunday, where production decisions will be closely watched. On the geopolitical front, India climbed to third place in the Lowy Institute's Asia Power Index 2025, achieving major power status with comprehensive score above 40 and ranking behind only US and China, driven by strong economic growth, enhanced military capability after Operation Sindoor, and notably overtaking China to become second most attractive destination for inward investment after United States, though the report highlighted that India's power gap between capability and actual influence suggests room for further diplomacy. Key catalysts for next week include US economic data releases, crude oil price movement ahead of OPEC Plus meeting, rupee trajectory against dollar, and corporate earnings updates. While domestically, market participants will watch for any follow-through buying post the strong GDP numbers and monitor FIDII activity, which showed FIIs selling 1,255 crore rupees yesterday, while DIIs bought 3,941 crore rupees, supporting the markets. Based on today's action, traders should watch the 26,300 breakout level closely, as that remains the key trigger for next leg of rally, and with technical structure staying bullish above 26,000 support and strong GDP data providing fundamental backing, a buy on dips strategy near support zones of 26,150 to 26,000 appears prudent for short to medium term, while maintaining strict stop loss below 26,000. If you've got questions about today's market moves or want to share your views, send them our way, and we'll address them in upcoming episodes. That's all for today's evening wrap. Stay tuned for tomorrow's morning update, where we'll bring you all the pre-market cues and global overnight developments. Until then, trade safe and stay informed.